Yesterday, the main US stock indexes declined. It's due to the fact that investors are gradually switching their attention to the Fed meeting scheduled for next week. They are looking for clues about the timing of the QE program tapering. As for now, let's discuss what happened during today's Asian session. The US dollar index began to drop slightly last night because of two reasons. The first one is that the index once again reached the resistance level near 93, followed by a predicted pullback. Secondly, yesterday the US unveiled fresh economic data, which partly showed a good pace of economic recovery. It triggered a high demand for stocks and a subsequent decrease in demand for the greenback. The US currency is highly likely to slide to 92.70 or lower. The dollar-yen pair has the opposite dynamic. The pair has added gains in recent days. This growth is based solely on yesterday's increase in the US dollar. However, it has a weak point. It's vulnerable to the slightest increase in the stock market. This is why a rise in the greenback was short-lived. US stock indexes did not react so positively to new economic data. If the Fed hints about the tapering of asset purchases at the upcoming meeting, the stock market is highly likely to face strong bearing pressure. Investors may lose interest in stocks as the equity market has been expanding for a long time purely because of money injections. If the stock market falls, the yen will strengthen, heading for the target level of 108.35, a low looked on May 11. The Aussie lost 39 pips amid the strengthening of the US dollar across the board. The price has stopped at the indicator line. It may consolidate below 0.7275 with a subsequent decline to the target level of 0.7065, or it may also reverse upwards from this level. On the chart, the pair is developing a downward movement. Technical indicators are showing the same. However, the trajectory will largely depend on the results of the Fed meeting next week. In the meantime, the quotes may be trading between 0.7270 and 0.7340. No sharp swings are likely to occur until next week. The FOMC meeting will be held on September 21 and 22. More and more policymakers believe that it's time to reduce QE program this year. Market participants are confident that recent statistics showing that US inflation slowed in August are unlikely to postpone the tapering. Do not miss our next video review. See you soon!